Good morning, people. Welcome again, MySpace Secrets, with another update. If I sound a little bit tired or under the weather, it's because I was up trading last night, which actually went really well. 2009 is going to be another very big year. It's going to be a lot of volatility in this market, so it's best if you are a trader to make the most of these opportunities as they present themselves. Okay, well, with the inauguration of Obama in just a few days, the US authorities are still consciously devaluing the US dollar, basically by flooding the market with liquidity. Or, in other words, they're turning on the printing presses and they're printing off money left, right, and center. Also, if you have seen the huge rally in the government bonds, the T bonds, or you're investing in this, you could be making a terrible mistake because I think it's the last bubble that is left. They're doing this on the idea that you can fix a period of excess borrowing and excess consumption, but basically just borrowing more and putting more consumption or leveraging more consumption. And to me, that's just ludicrous. It's ridiculous, and it pretty much goes against the grain of the simple rules of economics 101. And in yesterday's news, Britain actually threw its troubled banks another multi-billion pound lifeline by allowing them to insure against steep losses and quarantining their debt. Now, obviously, this is going to help them short term, but down the track, when things start to fail anyway, they will realize they've made a huge mistake. And this interfering by public and government corporations is what has caused the financial crisis in the first place. And specifically, central banks, or realistically the US Fed, by keeping interest rates artificially low for too long, they've created a huge leverage in the system. So the people who have created the problem are now in charge to bail out the system. And that's why I'm very skeptical. I've been skeptical all along, and I've basically said it wouldn't work from the get-go. And you've seen the product of what happened at the end of 2008 and now leading into 2009. Really, the government's effort to pour money into certain businesses and to keep them afloat while letting others fail has increased the volatility, and that's why we're seeing these big runs up on market, big up days, big down days, but we're still in a bear market and we'll continue to see the market go lower. And even though it's a bad thing seeing these companies go down, these contractions are actually serving to build for future strength, because the weak competitors are eliminated. If you support the weak competitors, you're essentially penalizing the strong competitors, and therefore a lot of these people, or these smart people that are saying let the small companies fail and let the big companies fail, are basically very smart. There is a chance that the second half of this year in 2009 may be worse than the first half, but the markets, which were oversold in November last year, may go a little higher, especially with the Obama inauguration coming up. And like I've said before, there's nothing in the rule book, especially in this bear market we're in at the moment, that says we can't have solid up rallies. So that brings me to the next thing. Let's go over and have a look at the chart now, the S&P 500, and see how this ties in technically with what's happening on the market. Okay, so we're still sitting in a bear market. The reason being is because we have lower highs and lower lows. So we're still obviously seeing that negativity in the market. If you had a look back in the end of November, we did have that ascending triangle position. Normally, when you have these sort of patterns right here, the market normally shoots back up. But that wasn't the case because we're in a bear market. Down here, we saw a full failure of that pattern, and we actually continued back down like I thought just before the holidays there. Another interesting thing to mention is that this resistant point up here, when we had the failure at the top there, which was at the start of January, if you see that position there and what has happened over the last week, we've now gone into this little downward channel position down here. Now, that's very interesting, but we do have, remember what happened last time with when we had a lot of news with Obama when he won the elections, the market went up. We could have a little bit of a Obama inauguration rally, which could take the market up a little bit. But eventually, like I said in my other technical videos, we do have that low point down here, and that was at the end of November. That's the low point. It's the lowest the market has been, but eventually, even if we have a rally from this position up here, we will see the market come down and retest those lows back in November '08. I mean, it won't happen tomorrow or the next day, but eventually, if you've seen some of the news, some of the bailout news, some of the banks that are going under, some of the manufacturing numbers, retail sales, I mean, that's really fundamentally, it's not going to take the market back up. So eventually, technically, that's what I see the market doing, go back and retest those lows. Maybe it could break through, maybe it could have a bounce back up. This year is going to be very volatile, just like last year, but we are still in a bear market, and the market will continue to go lower. We could go a little bit sideways as well, but that's what I see for the market. Anyway, I hope you enjoy my update. Thank you for watching. Hopefully these videos are helping you out. If you have any questions, my email is up the top there. You can contact me on financial911@gmail.com. That's financial911@gmail.com. Just a quick update, I have more updates coming in the next week or two. Stay tuned, have a great day, and I will talk to you all very soon. Bye.